First, welcome everyone to the webinar on how to create a home buying seminar. I'm going to try to make it as easy as possible for you, but I'm going to start out with a couple of questions. If you could easily explain to someone that they could buy a home for as little as 1% of the purchase price. If you could explain that there's 3 buckets of cash that are needed to buy a home, and you could state that with confidence, would you shout it out? Would you help more people become homeowners instead of renters? If you had the educational materials to show someone how to buy a home for as little as 1% of the purchase price, would you gather friends, prospects, take out Facebook or Google ads just to bring potential buyers together? If you had a partner that would guest speak with you at webinars, allow you to host webinars, and that your guest speaker could make a presentation after presentation after presentation and educate your invited guests, would you seek out buyers and invite them to your webinar? After all, the thing that you do best as a realtor is to be an effective listener and find homes that meet the needs of your clients. Wouldn't your real estate business be enriched if you had a partner that would educate people on how to buy a home for as little as 1% of the purchase price, and then you find them that dream home? Today, my goal is to show you a sample home buyers webinar that it's already in PowerPoint form. It saves you the time of putting together your own PowerPoint and getting you excited to invite at least, say, 6 or more people on a monthly basis to your very own home buying webinar, where you are the hosting the webinar and you're inviting guest speakers. What do you need? You need Zoom, which I have for you. You need a guest speaker, which I am. And you need a list of potential attendees, something that you can do over a 30-day period, bringing people together for education. You already have Zoom, you already have a guest speaker with me, so then you focus on the invitees. You can make your presentation short, say 30 minutes, or you can lengthen your presentations by inviting more guest speakers, such as an attorney, such as a home inspector, an insurance agent, or an appraiser. So let's turn our attention to your first home buying seminar. I'm going to do the short version that has already been created for you. We only need to put your picture, your contact information on the first page and the last page, and you're set to go. So let's start with what it looks like from a first time home buyer, or it can be an existing home buyer. I mean, these programs that we're going to talk about should get people excited about how to buy a home, and with little to no money of their own put into the transaction. So here we have an example of Pam Greer. She's with HomeSmart. Tony Marino is one of the hosts, being the branch manager of First Centennial. And it's a journey toward home ownership, how it got easier, the home buying seminar. Obviously, we would change out your picture, your company's logo, and your name and your agency's affiliation. We'd put information about the realtor here, about the realtor, how you've been serving the greater Chicagoland area for so many years, that you're an agent with, say, HomeSmart Realty. Where are you licensed? Illinois, Colorado, Florida, maybe you're in Indiana, Wisconsin. You specialize in getting people into home ownership using down payment assistance, and you use education to help people understand how they can become homeowners and own a part of the American dream. About Tony Marino, he's the branch manager of the Marino team in Naperville. He's a loan originator, and he's licensed in Illinois, Colorado, and Florida. He specializes getting people into home ownership using down payment assistance, and he helps people understand how they can become homeowners and become and own a part of the American dream. The American dream. Homeownership is still the American dream, and buying a home can be exciting and an intimidating process. I believe in the American dream, and I feel most people still do, but are unsure as to whether it's achievable anymore with rising interest rates. The Home Buyer Workshop will present you with information that will help to prepare you to purchase a home. By the way, can everybody see my screen? Can everybody see the PowerPoint? Ben, can you let me know if you can see it?
Yes, I can.
Great. So I have this workshop. Well, there's a need and a want to become a homeowner still in America. It is becoming more of a buyer's market. We've had more home inspections going on. We've seen price reductions going on. Last week, we got a contract in where the seller was actually giving over $5,000 in a closing cost credit. But there's too much misinformation about how much of a down payment do I need? You know, is it 20% that I need for a down payment? We need to educate potential buyers on the home buying process and on home ownership benefits. We want to set aside the individual's lack of confidence in the home buying process or becoming a homeowner. They think that they're years away from owning a home. 50% of the renters think they can't afford the down payment. However, they have the financial means to make that rental payment every month, which could be also the means by which to maintain mortgage payments. We need to educate individuals on the financial assistance available to them. We need to enhance the quality of their life. Homeowners have 45% greater net worth than those that are renters. That would obviously improve the quality of their life. They'd have their own backyard. I mean, it does improve the quality of their life. And we can help individuals with wealth building and equity appreciation. I don't know of anybody who has amassed any significant net worth who didn't have real estate in their portfolio. Who is this workshop good for? Well, it's good for renters, existing homeowners. Something that I think we overlook are sons and daughters of clients that we've already worked with. You know, I've got 3 daughters. 2 out of the 3 have already used down payment assistance to buy their homes. So I mean, it's the millennials, it's the sons, it's the daughters. It's just a hello call to our existing customer base, saying, I hope that you're enjoying the home that you bought, but do you have a son, do you have a daughter that possibly is graduating from school or has already graduated and might be a renter and is looking to either move out of their parents' home or is looking to buy their first home? It could be family members that dream of home ownership, friends, anyone who thinks they can't buy a home because they didn't save enough money, or anyone who thinks they can't afford the housing payment because interest rates most recently have increased. Some of the myths that we have to dispel are 45% think they need a very good credit score to get a mortgage today. They think a good credit score is 780 or better. 35% think they need 20% down payments. The fact is the average down payment is just over 7%. 64% have not put down 20%. 36% have not even put down 5%. 31% think they don't qualify for a mortgage loan. So what are the advantages of home ownership? It's a place of your own. It's a stable housing cost. I don't know about you, but I've seen rents continuously increase and increase and increase. It's becoming, quite scary in America as to whether or not, even renters can afford the places to rent. If you own a home, you're going to build equity. It's an appreciating asset. You get tax deductions on interest and real estate taxes you pay. You can borrow against the equity you build up in your home, or you can convert it to cash later when you retire. That's my way of saying that they can also use this as a reverse mortgage later on in retirement to pay them a monthly amount for the rest of their life, just like Social Security. And once again, homeowners have 45% greater net worth than renters. Here's some more advantages of home ownership. They can stop paying rent to a landlord. They can move out of mom and dad's house. They can gain independence. We've already talked about them paying less in income taxes. And they can increase one's wealth by acquiring an appreciating asset. Buying a home is a huge step, But buying a home doesn't have to be confusing nor challenging, especially with the help of a wonderful, qualified realtor and a licensed loan originator. So what is involved in the home buying process? Something that we need to educate the home buyers on. First, they need to give authorization to have their credit report run and reviewed. Do they have the minimum credit score, or do they need credit rescore? Do they need to get a plan? Usually if they're given a plan, which again, a lot of the credit agencies have, we have what's called a what if analyzer. What if you paid off this collection? What if you brought this Visa card down from $900 to $100? What would my score change to? What would be the improvement in my score? And we see that happening within 30 to 60 days by most people who are motivated to buy a home. The lender can help improve the credit score. They can make suggestions and even print out a credit repair plan. Once you have your credit score, you have the minimum credit score to qualify, get pre-approved for free. You can download what's called our FCM Express app and get started immediately. The lender can help determine how much you can afford. Based on your income, what does your income afford? After you've been pre-approved, once you know the amount that you qualify for, you meet with your wonderful realtor to discuss your housing needs, the price range. You know that from your pre-approval, so now you communicate, you share your pre-approval with your realtor. What size house do you need? How many bedrooms? How many bathrooms? What kind of neighborhood are you looking for? Are you looking to be in a rural setting? Are you looking to be in an urban setting? What kind of a lifestyle are you looking for? Are you looking for, something more urban where you can go to restaurants and that you can, you have workout facilities within walking distance? Or are you looking for something that's more country-ish? Then you're going to make an offer with the help of that wonderful realtor. You're going to enter into a purchase contract. They'll negotiate the earnest money. You'll know how much of a down payment by having been counseled with your loan officer as well as with your beautiful realtor. After you've gone to contract, you're going to select an attorney. Most realtors, most loan officers can refer a qualified real estate attorney. You're going to perform your due diligence. You're going to hire that home inspector, make sure that everything is operating as intended, that the foundation doesn't have cracks in it, that the roof doesn't have leaks in it. You're going to do a radon inspection. You're going to send that executed contract and your loan documents to your lender. So now they can create the full application, which then starts in the processing department once it's signed. They order up the appraisal. They verify your employment. They verify your income. The loan goes to underwriting for approval, decline, or suspense. Once it comes out of underwriting, you get a conditional approval. There may be some additional conditions. Once you satisfy those conditions, you get it clear to close, and you go to closing at a title company with the funds that are needed for closing and your photo ID. At the closing, you'll be at a title company or at the seller's attorney's office. You'll sign documents to make the home yours. The seller gets a check, which is usually the money that you borrowed from the lender. And the buyer, you receive keys in the deed to your property. Move in. So why don't most people buy a home? Well, there's not enough money that they've saved. So we're going to talk about down payment assistance that's available to you through the realtor, through the lenders that are in the program. Why don't most people buy a home? Because their credit's not good enough. Well, if it's not good enough, it doesn't meet the minimum requirements, there's something called credit repair, credit rescore. We can get them up to where they need to be within 30 to 60 days. And some people just don't think they can buy, which again, that comes through education. That comes through the realtor, through the loan officers, putting out webinars to educate people, letting them know that it's not that far off in the distant future that you can become a homeowner. So if I have limited cash and good credit, I either have it or I've gone through credit repair and I now have the minimum credit score. What are my loan options? How much cash do I really need to bring to closing? Let's take a look at some of the exciting programs that are available to a homeowner. First off, if they're a veteran, they get 100% financing. They can borrow 100% of the purchase price. If they're in certain rural areas, they can borrow 100% under the USDA program. If they have a very good credit score, they can get 97% on a conforming loan. If they have a lower credit score, they get 95%. If they're going FHA, they can go, and their scores are as low as 580, they can get an FHA and get 96.5%. If they're looking at a home, it's great location, it's in the right school district, but it's bruised home. It needs some fix up. You can buy and fix up. You can get 96.5% of the purchase price. You can get 96.5% of the repairs. And now you can make it that dream home that you're thinking about. So if people have vision about what a home should look like, and they love the area, love the neighborhood, this is a great loan for them. But now what if they don't have the necessary funds for down payment? How about if we add on a $6,000 forgivable grant? Remember I said forgivable, it's forgivable over 10 years. So you're able to take 10 years is 120 payments. 120th is forgiven every month. So if you stay in the home for 10 years, none of this is due back to the state of Illinois. And again, if you don't stay in for the full 10 years, if you stayed in for 50% of the time, when you sell the home, the state of Illinois will then ask for not for $6,000 back, but they'll ask for 50%, because you only stayed in the house for 50% of the time. And they'll be asking you to pay off $3,000 out of sales proceeds. Similarly, there's a $7,500 program. And let me preface this. There's only 2 green lights that you need to get these additional funds. You need a 640 or better credit score, and you need to make less than $125,000. The borrower needs to make less than $125,000. I know lots of people that make less than $125,000. Realtors, you know people who make less than $125,000. Do not let down payment be the reason they're not buying a home. But the second option that they have, they can add on a $7,500 zero interest loan with deferred payments for 30 years. So what does that mean? That means that they can get $7,500 today. There are no payments for 30 years. It's a zero interest loan. So if they stay in the house for 10 years, 15 years, 20 years, at that point in time, they owe back the $7,500 loan, zero interest. And at that point in time, they would pay it out of sales proceeds. If for some reason they keep the house for 30 and plus years, at the end of 30 years, they would owe back the $7,500. So this is what I call the crazy great loan from the state of Illinois. Zero interest, no payments. I live in the house, and then when I sell it, I have to pay it back. Couldn't be a greater program. I always ask, where was that program when I was trying to buy a house? Lastly, they can add on $10,000 from the state of Illinois. Again, it's a zero interest loan. However, this one's a repayable, principal only. There's no interest on this. Principal only repayment over 10 years. 120 payments into 10,000 is $83.33 a month. Pretty great program. I always tell my clients, if I give you $10,000 today that you can use for your down payment and your closing costs, could you pay $83.33 a month? And I ask them, what does it cost you if you take your significant other out for a nice dinner, you know, have a glass of wine? What would it cost you? They say, Glenn, it depends on the restaurant. It could be $60, $80, $100. I go, could you give up one of those meals a month such that you got $83.33, and I'll give you $10,000 so you can go out and buy that dream home? It's a done deal when you put it in that perspective. They say, absolutely, let's continue to move forward. So we've got some real exciting programs, and under the add-ons, the only requirement beyond the 640 credit score, beyond that they must make less than $125,000, is they need to come up with 1% of their own funds. I can show you now how people have at least that 1%. If they're looking to buy a $300,000 home, 1% is $3,000. I guarantee you, if they were going to go out and rent a home, especially in the Naperville area, they'd be paying rent of about $3,000 a month for that house. And they would come up with a security deposit of another $3,000. they've got $6,000 in the bank. But if you can show them, instead of spending $6,000 with a landlord, that you can get them into a $300,000 home for $3,000, I think their ears will perk up. I think that they would love to hear more of what you have to say. Again, it's called the IDA program. It's the Illinois Housing Development Authority, in which they get $6,000 max on a forgivable grant. It's 4% of the purchase price up to a max of $6,000. So if they buy something for $150,000 or more, 4% is $6,000, which is the max, and they get a forgivable grant. Again, the second one, the no interest deferred payments for 30 years, the $7,500 no interest loan, it's a max of 5% of the purchase price. So again, if they buy something for $150,000 or more, which is most of our clients, they get $7,500 and there's no payments until they typically sell the house. Lastly, it's 10% of the purchase price up to a max of $10,000. So if they buy a house for $100,000 or more, they get the full $10,000, no interest, and they must pay $83.33 a month in repayment. So what are some of the eligibility requirements to get to that $6,000, $7,500 up to $10,000? Well, first, it's available first-time home buyers and non-first-time home buyers. I know some people that, they're looking to move up. They've all of a sudden, they've bought their house when they had no kids. Now they got 2 and 3 kids. So they got to go from, a 2-3 bedroom up to a 3 or 4 bedroom home. They do have to stay within income and purchase price limits, and we'll show that, shortly. They must purchase a 1 or 2 unit single family residence. This program is great for the 2 units, and we'll show that in a little bit as to why it's so great. The borrower must occupy it as their primary residence. No non-occupant co-borrowers are allowed, which means the parents can't be a non-occupant co-borrower. They can't say, well, I'm going to help Johnny or Susie, and I'll just be a co-borrower, but I'm not going to live in the place. No, that's not allowed under this program. It is available. These are add-on loans. These are second mortgages. They get added on to your VA loan, to your FHA loan, to your USDA, to your conventional loan. So it doesn't stop you from picking the best loan program for you. You're just going to add on a $6,000, a $7,500, or a $10,000 second mortgage. There are income and property limitations we'll see in a second. As we mentioned, the minimum credit score is 640. They cannot have a debt to income ratio, total debts. Your housing payment plus minimum payments on credit cards plus your auto loan, student loan payments cannot be more than 45% of your gross income. The borrower must contribute 1% of the purchase price, and they must go through homeownership counseling. They can do that online, very easy. There is only one interest rate, so it's really a great program in the sense that they don't have to shop around. They don't have to look, oh my God, does Bank of America, does Wells Fargo, does somebody else have a better rate for me? No. If you're taking the $6,000, $7,500, $10,000, there's only one interest rate. The interest rate is the rate for the borrower's first mortgage, for the FHA, for the conventional, for the VA, for the USDA. The down payment assistance program is a second mortgage lien on the property, with only the $10,000 program requiring $83.33 a month. Here are some of the typical interest rates. As of August 11th, if you took out a government, which is a VA or a FHA loan, most of them are FHAs. If you took out the forgivable grant, it's 5.625. You took out the 7,500, it's 5.625. Took out the repayable $10,000, it's 5.625. Would be the interest rate on that first mortgage. Here's some of your income limitations. The borrower, not the household, the borrower must make less than $125,000. So if I have a husband and wife, and if the husband makes $100,000 and the wife makes $90,000, that's $190,000. You'd think they don't qualify. But what I would do is I would look at just say the husband or just the wife and say, just you be our borrower. The other spouse can be on title, but as long as the borrower's income is under $125,000, they would qualify for this down payment assistance. And look at these purchase prices. They can go almost up to $350,000 on a 1 unit, and they go up to $447,000 on a 2-unit property and still qualify for the $6,000 up to $10,000. So let's take a look at an example. Here we are, dear renter or potential borrower. You're gonna be purchasing, say, a $300,000 home. Your down payment is going to be an FHA 3.5%. We're going to use the $10,000 repayment program. The average closing costs on a purchase are $5,000. And whenever you use the money from IDA, from the state of Illinois, there is a 1% origination fee. So let's say that's $3,000. So if we were to rent, say, okay, I don't have the necessary down payment, I got $6,000 in the bank. I got $3,000 for first month's rent, $3,000 for security deposit, and I got $6,000. How can I become a buyer with only $6,000? Well, there's 3 buckets of cash, and I want you guys to walk away from today understanding, I talk in buckets because I think it's easy for me to talk about it. I think it's easy for you to talk about, and I think it's easy for a potential buyer to understand how much cash I need to accumulate. Bucket number 1 is down payment. Bucket number 2 is closing costs. And bucket number 3 is prepaids or escrow. So let's go back up to down payment. The down payment you said was 3.5% of $300,000. That's $10,500. Every time you look at a purchase transaction, you need to ask who pays the money needed for that bucket. Well, who pays? Well, the borrower could pay. And in this case, because they are using $10,000 and they need a 640 or better score, and they have to make less than $125,000, and they need to put in 1% of the purchase price. What is 1% of $300,000? It's $3,000. So our borrower is going to put in $3,000 of the $10,500. They're going to take out of their $10,000 bucket $7,500. Add the 2 together, 3,000, 7,500, that's 10,005. They've got all the money for bucket number 1, put a check mark and say, got all the money I need. Thank you very much. I'm out of pocket $3,000. I still have $6,000, so you use 3 of my $6,000. Bucket number 2, closing costs. We said it's typically $5,000 in ordinary and necessary closing costs, and another 1% fee of $3,000. Okay, so that's $8,000. We have this here in bucket number 2. Our closing costs are $8,000. As we get into the loan application, the detail will be given to them in a loan estimate. But this is a great talking point. We don't need to go into all the minutia at this point. We're educating them at this point. So you got $8,000 in closing costs. Again, every bucket we must say who pays. Well, the borrower could pay, but we would prefer them not to pay. So who can pay? Well, let's go down the line. IDA, remember we had 10,000. You used 7,500 in bucket number 1, so we got $2,500 still remaining. So we need then another $5,500 to make up the $8,000 bucket. Well, this is where the realtor negotiates for the client. They either willingly negotiate, meaning the seller is willing to give them $5,500, or the realtor can, after a table of expectation is met, after you come together on $300,000 is our purchase price, and my realtor who represents the buyer is now going to put the contract together. My realtor goes back to the seller and says, my client does not want to pay $300,000. My client wants to pay more. And to the surprise of everyone, including the seller, they say, wow, this is fantastic. They want to pay more than $300,000. But your realtor, being the smart realtor that he or she is, says, I want my client wants to pay $305,500, provided the seller pays $5,500 in closing costs. They take out their calculator and they go $305,500 minus $5,500 in closing costs that the seller would have to pay. They go, well, I get my table of expectation. I get $300,000. So the seller doesn't care. The realtors think it's great because now their commission's not on $300,000, it's on $305,500. And last but not least, the buyer says, this is great because I'm not coming up with any money in bucket number 2 because I have the seller and IDA paying for my closing costs. Applause, applause for bucket number 2. Bucket number 3, escrows. Escrows are a fancy term for deposits you're going to set aside or set up with your lender for real estate taxes and homeowners insurance. Real estate taxes are paid twice a year, homeowners insurance once a year. But what we have in the state of Illinois is the fact that our real estate taxes are paid 1 year in arrears. Again, a fancy term for we are in the year 2022. We are paying the 2021 real estate taxes. So we are in August. If we had a client tomorrow go to purchase contract and the closing date was September 30th, 2022, who has lived in the house from January 1st, 2022 to September 30th, 2022 for 9 months? The seller. The seller will give our buyer 9 months worth of real estate taxes as a real estate tax credit. The credit, for everybody to walk away from today, the credit is always, always greater than what the lender will require you to put up in real estate tax escrow or homeowners insurance escrow. So if the credit is greater than what needs to be set up, bucket number 3 is a big 0. In the real world, it's actually a negative number, but for educating purposes with our borrower, it is a 0 bucket. So let's go in reverse. Bucket number 3, escrows. Who pays for it? The seller tax credit. The only time you're not going to get a big tax credit is if it's new construction, but 99 out of 100 of the cases that I work on, it's existing real estate. So if this is 0 because of a seller tax credit. Bucket number 2, closing costs are 0 because IDA and the seller are paying for it. And bucket number 1 is $3,000 because the remainder is being paid for by IDA. So, dear customer, you can pay $3,000 and buy a $300,000 home, or you can give $6,000 to your landlord and just rent and have a non-appreciating asset. Which would you prefer? I don't know about you, but if I were to present this one pager to one of my potential clients, I think they would say, would you please continue to move me forward toward home ownership? So so again, now that we know that the rate is going to be about 5.625, that they're buying a $300,000 home, what's going to be their mortgage payment? Okay, well, in today's environment, 5.625, principal and interest is $1,695. Remember we said the $10,000 requires $83.33 a month to be paid back. The real estate taxes, depending upon the house, $553. Homeowners insurance, you'll shop around, is $100 a month. And then you're going to have private mortgage insurance on an FHA loan of $205. So your monthly payment is $2,600. Or you can pay rent of $3,000. If you have a mortgage payment, you'll be able to deduct the real estate taxes. You'll be able to deduct the interest on the home mortgage, or you can pay rent and deduct nothing. So again, this assumes a 5.625 interest rate, but what if this was a 2 flat? What if we were buying a $300,000 2 flat, and in this other unit, I had someone paying the borrower, our customer, $1,000 a month in rent? The $2,600 becomes $1,600. This becomes very attractive now. I have many a client who said, you know what, I want to look at a 2 unit. I want my payment to be, in the $1,600 range, not in the $2,600 range. So again, keep this in the back of your mind that it's not just for single family. This is available for 2 units. And here I'm just showing a smaller purchase price of $200,000. Again, on $200,000 and with an FHA 3.5% down, using $10,000 as the down payment assistance, with needing $83 a month to be repaid. The rent on a smaller house would be about $2,000 a month with a security deposit of $2,000. They'd need to come up with about $4,000. So the renter who said, I can't buy, I don't have the necessary funds for all 3 buckets of cash, because in this case, all 3 buckets is $7,000, another $6,900. It's almost $14,000 that they would need. They don't have it, they say. Therefore, I'm just going to be a renter. And you're going to be an educating realtor and say, nope, Bucket number one, 3.5% of 200,000 is only $7,000. You need to come up with 1%, which is $2,000. 1% of 200,000 is 2,000. I need another $5,000, so I'm going to take it out of the $10,000 down payment assistance bucket from Ida. 2 and 5 is 7. I got all the money for bucket number one. Put a check mark on it. Bucket number 2 is the $5,000 in normal ordinary closing costs plus another $1,900 in an origination fee. So you got about $6,900 in closing costs. We want the borrower to pay nothing. So Ida still has $5,000 remaining in the Ida down payment bucket. The seller, because the realtor is a phenomenal negotiator, is going to get the seller to pay $1,930 in closing costs. I now have $6,930 in closing costs. Put a check mark. I got all the funds I need, with the borrower putting up $0 for bucket number 2. And as we've already talked about, bucket number 3, the real estate tax credit makes this a 0 bucket. It pays for any type of escrows that are needed to be set up with the lender. Bucket number 2 is 0. Bucket number 1 is $2,000. So for $2,000, they can buy a $200,000 home, or they can go out and rent and give a landlord $4,000. Not sure why they would do that if you, being the educating realtor, were to give them all this great information. So what do they need in a payment if it is a $200,000 home? Given today's rates of 5.625, well, the principal and interest is $1,130. And again, the down payment for the $10,000 requires a repayment of $83. The taxes are in the $400 range, with homeowners insurance about $75 a month, and the PMI is $135. They would have a payment of about $1,800 a month, where they can deduct the interest, where they can deduct the real estate taxes for income tax purposes, or they can pay $2,000 a month in rent and get nothing. So what if, here's a short quiz, what if the earnest money at the time you went to contract for them, you put in the 1% of the purchase price? How much cash would your buyer have to bring to closing? Well, if it was $3,000 on her $300,000 purchase, and you already gave the $3,000 as earnest money, and they're going to get credit for that at the closing, the answer is 0. They would bring little to nothing to closing. And you are going to look like a hero for having done that. So let's summarize the 3 buckets of cash. Bucket number 1, down payment. Always ask who pays. You, the borrower, can pay, or Ida can pay. On a conventional loan with high credit, it's a 3% down payment program. Conventional with lower credit, it's 5%. On FHA, scores down to 580, it's 3.5%. Or you can do 1%. Is your share if you use the Ida down payment assistance of up to $10,000. Bucket number 2 is closing costs. Again, always ask who pays. It's always approximately $5,000 plus a 1% fee if you use the Ida funds. So who pays? Well, you, the borrower, you can pay it if you want to. Ida can pay if you use, the $10,000 or less, or your realtor can negotiate to have the seller pay, because the seller either outright is motivated, to agree to pay for so much of your closing costs, or you can ask, the realtor can ask that you, the buyer, pay $5,000 more for the seller's home, provided the seller's pays $5,000 of your closing costs. And the caveat here is also the realtor is smart enough to have looked around at other comparables, provided that the house will appreciate for $5,000 more than what you originally agreed to pay for it. So if you agree $300,000, you're now going to pay $305,000. Make sure that the realtor says, yes, I believe, I'm not an appraiser, but I believe that there are comparables that this home will appraise out for at least $305,000. Your lender, another person that can pay your closing costs is the lender. They can pay with a higher interest rate on non-Ida loans. On loans where you're not using $6,000 up to $10,000 in down payment assistance, the lender can increase the interest rate and then provide you back with what's called a lender credit. So it can be any one of these combination that can help pay for the closing costs. So how much of your own funds were used for closing costs? Hopefully, borrower, none, because we've got other people, other entities that can pay for it. Bucket number 3, prepaids, the escrows. Again, we have to ask in this bucket, who pays? Well, prepaid interest is interest that you're going to pay from the date of the closing to the end of the month. Your realtor is such a fantastic and knowledgeable person that they're going to try to make your closings come to fruition right toward the end of the month. So if you close on September 30th and you use the lender's funds for one day, just on September 30th, you're going to bring 1 day's worth of prepaid interest to the closing. Not a bad deal. The escrows, like we talked about, they're going to be set up either 2 months, not either, it's going to be 2 months of homeowners insurance and anywhere from 2 to 8 months worth of real estate taxes, depending upon the month that you close in. But not to overcomplicate it, Illinois pays real estate taxes in arrears. Therefore, the seller will give a credit to the buyer, to you, the borrower, for real estate taxes for the number of months while the seller lived in the home. And we know that the real estate tax credit exceeds what the lender wants you to set up in your initial escrow at the closing. So this bucket is always 0, except on new construction. Summarizing the 3 buckets of cash, how much of your own funds do you have in the deal? Bucket number 1, down payment, 1% of the purchase price. Bucket number 2, closing costs, 0. If Ida and the seller are paying the closing costs. Bucket number 3, escrows, 0, with the seller giving you a credit for real estate taxes. So what are you waiting for? Why aren't you taking action? Now that you've reviewed and you know how little cash is needed, how do you meet the 3 C's of lending? Well, the first C is credit. We already talked about this, minimum 580, 640 if you're doing down payment assistance. And if you don't have either one of those scores and need or want them, then work on credit rescoring with a licensed loan originator. The second C is cash flow, or your gross monthly income. The maximum is 45% debt to income when you're using down payment assistance. It's 50% on conventional loans and 55% on standard FHA loans. The last C is collateral, and that is an appraisal. So if you'd agree to buy something for $305,000, we need it to appraise out for $305,000. If it appraises for less, you're going to have to bring more money to the closing. Under credit, which is the first C, you can get your score from any one of the 3 national repositories: Experian, TransUnion, Equifax. Lenders take the middle score of the 3. That's your score for qualifying purposes. It can be anywhere from 0 to 850. Remember, you need at least a 580 for a standard FHA. You need a 640 if you're going to use down payment assistance up to $10,000. If you don't meet those 2 requirements, then work on credit rescore, credit repair. You have a friend in a realtor, you have a friend in a loan originator that can give you a plan that in 30 to 60 days, you're on the dance floor. Now that you know that you have the credit score, you've worked on credit repair, or you have the score. Now you're looking at the next C, which is cash flow. So what you're gonna do is you're gonna add your housing payment to your minimum payment for credit cards, car loan payments, student loans, and other debts. This is called your total monthly debts. So again, going back to the housing payment, which was about $2,600, you're gonna add in your minimum payment on credit cards. Maybe it's a couple $100. Maybe you have a car payment, maybe you don't. Maybe you have student loans, maybe you don't. And you're gonna add them all up, and that's your total monthly debts. That's gonna be your numerator. Your denominator is gonna be your gross income. I didn't say net, not your net take home, it's your gross. Then what you're gonna do is you're gonna keep your total monthly debts, the numerator, divided by your gross monthly income under 45% if you're using down payment assistance, under 50% if you're using a conventional loan, and under 55% if you're using FHA. So let's just, again, refresh our memory. What does your housing payment consist of? Well, it's principal and interest, homeowners insurance, real estate taxes, private mortgage insurance, flood insurance, if applicable, and your homeowners or condo association dues if you're buying into a townhouse or a condominium. Again, what does it look like? Well, here it is on that $200,000 home. Here's your principal and interest, your down payment assistance, payback, real estate taxes, homeowners insurance, PMI, for a payment of about $1,800. How do you calculate your gross, not your net income? Well, it's usually your gross salary divided by 12, or we take your hours that you work per week, say 40 hours a week times $20 an hour, whatever your hourly rate is. And then we'll divide that, by 12. Your bonuses, if you're subject to bonuses, we give you a 2-year average of what you've received, not what you're going to receive. Commissions, if you're a realtor, loan officer, somebody that's in a commission paying job, we average it over a 2-year period of what you've received. Overtime, the same thing, 2-year average. If you're self-employed, which we define self-employed as someone who owns more than 25% of an entity. If you own less than 1% of IBM, you are not considered self-employed in owning part of IBM. But if you own more than 25% of a restaurant or 25% of a widget maker, you're considered self-employed, and we will look for the tax returns and we will average the net income of that company for the last 2 years and give you, say you own 25%, we'll give you 25% of the average net income of that company as additional income, whatever other sources of income you have. So how much of a loan can I get approved for? Well, lenders use debt ratios. Remember we talked about the housing ratio. It's the monthly amount you spend on housing divided by your gross income. And your total debt ratio is your monthly housing plus all your other consumer debt divided by your gross income. And we mentioned that it can't exceed 45% if you're using down payment, and it's up to 55% without down payment assistance. The loan officer, the Tony Marinos of the world, they can tell you what your income, your denominator, that gross income, they will stretch it all the way to 45% or all the way up to 55, and they'll let you know how much of a loan your income can qualify for. So let's see if we've answered these common questions today. How much of a down payment do I need? Depends on whether you're going to use down payment assistance or not. It could be as little as 1% to 3.5% to 3% to 3.5% to 5%. How much savings do I need in the bank? On FHA loans, it's typically zero. You don't need any type of what's called cash reserves. You could spend your last penny paying for any one of the 3 buckets of cash. On a conventional loan, it's typically 1 to 2 months of housing payments that Fannie Mae, Freddie Mac wants to see in cash reserves. How good does my credit need to be? As low as 580. We'd like to see it at 640 or better so we can offer you down payment assistance. What's a fixed rate versus an adjustable rate? We didn't really talk about it, but most people are still buying real estate using fixed rates since they can fix in their payment. They know that it's not going to jump up significantly from year to year, such as the rent might from year to year. What does my housing payment consist of? We went through the principal, the interest, the taxes, and the insurance. What are closing costs? We talked about in broad terms, it's $5,000 plus another 1% if you're going to use down payment assistance. What are escrows? That's the amount that you're going to set aside for real estate taxes and homeowners insurance. And how much do I qualify for? That comes from your realtor and your loan officer based upon your gross income. They'll stretch that debt ratio to 45% or to 55%, depending upon the loan program you're looking for. So your goal, your homework today is to get yourself pre-approved for free. Go to your app store, go to your Play Store and download FCM Express. Get yourself a free credit report. Either use that credit score or get it rescored and come back to the table in 30 to 60 days. Assemble your necessary documentation. Get an automated underwriting approval, get a pre-approval letter. Now that you have a yes, go find your home with your realtor. Share that pre-approval with your realtor. Review an action plan with your mortgage consultant and your realtor if there's more work to be done. In the meantime, the Marino team thanks you. Our commitment is to get you pre-approved within 24 hours after you fill out the online application. We're committed to financing that dream home. Here's Tony's contact information. Download that FCM Express and get started. The realtor way, here's where we would put in the realtor's contact information because the realtor is committed to be an effective listener. What are your family needs? You're committed to finding that dream home. You're going to always be available for questions. The realtor's name and contact information goes in here. You could possibly buy a home for less than 1% of less than your first month's rent and security deposit. What are you waiting for? Take your first step today. Call me, the realtor, to get you pre-approved with my team, and let's go shopping. Here's a small list of mortgage application documents that you would need to get pre-approved. And here's some sample Facebook ads. So what are you waiting for, realtors? We have sample Facebook ads that our team here, can help you put into Facebook, not only as a post, but as an ad. Get out there, get in front of thousands of people. Let them know that you can help them buy a $300,000 home for as little as $3,000. Notice in the very bottom here, there is an HTTP. That is a landing page. If you're going to do an ad, if you're going to do a Facebook post and try to bring people in to buy a dream home for 1% down, why are you not then going to do the next thing, and that is give them a sample landing? This is a sample landing page. If they click on that link within your Facebook ad or your Google ad, it's going to bring them here. It's say, congratulations, you're on your way toward home ownership. Find out if you qualify for up to $10,000 in down payment assistance. Buy a home for as little as 1% of the purchase price. Amazing. We create this for you. It's free, not something that you have to do. So again, let's get started. What are you waiting for? So again, at your seminar, we'll provide this to the participants that they can then give us authorization to do step one. Run your credit. Do you have a 640 or better score? Do you have a 580 or better score? So realtors, who wants to partner up and get started? Hopefully it's all of you. Any questions? Unmute yourself if you have any questions. So in other words, this PowerPoint is what we would use by inserting your picture, your contact information. You would be the host. You can use my Zoom. You don't have to go out and buy Zoom and pay a monthly fee. Your job is to invite people. You create the day and the time, a Thursday night at 7 o'clock, a Thursday night at 6 o'clock. You create the time and the date. I'll create the Zoom link. I give it to you. You send it out to people that you know or want to invite to a webinar. You are the host. You would welcome everyone. You would say some opening remarks. You might even say something about the real estate industry if you care to. And with that, you would introduce me as your guest speaker. I would put this on for them. Hopefully people would understand that they can buy $300,000 homes for $3,000, $200,000 homes for $2,000, and that they would want to get started with you on this process of becoming home owners. And we can do this monthly, quarterly, however often as you like. I mean, it's not that hard. So you've got Zoom, you've got a Zoom link to hand out, you've got a guest speaker. You can make it the short version like we did today. You can make it the long version by bringing in attorneys and home inspectors, etc. So any comments, any questions? I'm going to just look at the chat while you're doing this. Celia said you can see, so thank you, Celia. Any other comments, any other questions?
Glenn,
or tell me why you wouldn't want to do this.
Yeah, this is Melinda.
Hi, Melinda.
I have been taken as, like sponsors for weddings, and these are young couples that I've been working with. Is there a way that we can partner so that I can invite them in? Right now, I have two that just got married and they're planning to buy homes. Two of them.
And I mean, that is a phenomenal area, because I'll give you an example. My daughter's 27 and she's going to all sorts of weddings these days. And all of her friends are talking about becoming homeowners, because that first thing is getting married, and then the next thing is, well, let's buy a house together. So you're doing a phenomenal thing. So the answer is, can we partner together? Absolutely. I mean, when you think about it, you've got the names, you've got their, all we need is their email. I will give to you the Zoom link. I'll create it. You tell me, Glenn, it's today's August 15th. hey, Glenn, on August 27th, I want to do a homebuyer seminar. I'm going to talk to my current client who just got married. I'm going to ask her for her friends who might be getting married, who are already married, or just any of their friends who, maybe they're of an age where they just want to become a homeowner and stop renting. And you could invite all of them to the August 27th. All you need is the link. You're going to, I can even write up for you what the invite would look like, but it would be, if you're tired of renting and giving a first month's rent and a security deposit to a landlord and feeling that you can't afford the down payment of the closing costs to become a homeowner, you are invited to a homebuyer seminar to learn how you can buy a home for as little as 1% of the purchase price. Click this link to register. Just like you registered for this today, it's going to say, click this link to register. And so boom, 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 they're all, they all register for it. I would make you the host and myself the host on the day of August 27th. And all you have to do is say hi to everybody, welcome them, welcome everyone. This is Melinda. I invited you to this wonderful seminar. The real estate, the rents have been going up and up, and it's an exciting time for people to look again at home ownership and benefits of home ownership and how easy it is to become a homeowner. Home ownership just got easier with down payment assistance. So without further ado, I want to introduce my guest speaker, Glen Marino with First Centennial Mortgage. I speak.
So the ad, should I put that in Facebook then?
You can, because again, you can talk to your clients, right? I mean, the Facebook ad is going to run you, depends on, how long you run it, but, it'll run you $20, $30, $40, $50. So you run that for 2 weeks and you see how many people, again, you'll give them the link in your ad so they, again, can register for your seminar, as well as you will give to, or just email out to people that are your client, that you're holding this homebuyer seminar. And remember what I said at the very beginning, you've got clients that might be in their 40s, 50s, and 60s, okay, that you've helped them buy a home, but they just might have children that are in their 20s, like my daughter, who's looking to buy a home. 2 of my daughters have already bought with down payment assistance. So, your whole database is available for this webinar. So again, the approach should be email out to your database, email out and talk to all the people that are going to weddings and see if they can't give you referrals of other friends that would also like to attend. And then last but not least, do a Facebook ad and put it out there, to get get in front of thousands of people and see who's interested in learning how to buy a home for as little as 1% of the purchase price. Does that make sense, Melinda?
Yeah.
My suggestion, Melinda, would be look at your schedule and give me 2 dates.
2 days.
So anybody on the call, if you're interested in doing this, just give me 2 dates. And, the time will probably be the same. If it's a Monday night, a Wednesday night, a Thursday night, you're going to do it, 6 o'clock at night, 6:30, something like that. And just give me 2 dates. So in other words, when I create the Zoom link, it's called the registration link, and I give it to you and you send it out in your email.
Mm-hmm.
When they click that link and register, what I'll do is every couple of days, I'll give you an update. Hey, 4 people have registered today. Hey, we're up to 6. Hey, we're up to 10. Hey, we're up to 12. And I can give you the list of people who have registered.
Okay.
All right, guys, if you have no more questions, you can always get a hold of Tony to, just like Melinda's going to get a hold of me and Tony, get a hold of Tony Marino. And, by all means, let him know a date and a time when you'd like to do this webinar. If you want help setting up a Facebook post, if you want help creating a landing page, all free of charge, let us know so that you can get out there and start reaching out to thousands of people and bring them in as potential buyers for you. Thank you so much for your time today. You've been a great audience. I look forward to talking to you soon. Have a great day.